Hello, good afternoon. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. We'll begin with markets. Markets, in fact, at an all-time high this afternoon. Suyash Maheshwari joining us here in the studio. Suyash, good news, great news. This is history in making.
Definitely a historic day for the market, Shweta, as Nifty was able to scale past the 20,000 levels for the very first time. Now, if you remember, back in July when it touched a previous lifetime high of about 19,991 levels, after that we saw a period of correction in which the markets fell for a straight 6 weeks. Now, this was on the back of global economic concerns as well as surging inflation, which, by the way, still remains a concern.
Okay.
Now, since last week, we have seen a noticeable turnaround in momentum, and as a result, Nifty has risen nearly 750 points from its recent low and was able to scale past the 20,000 mark today. Although the Nifty index did not close at 20,000, it was just shy, about
just
4 points
shy of the
lower
20,000. I mean, I'm just quite amazed. And I think we were discussing it in the morning and we were prepared for this number because we had an epiphany last week. And let's also quickly tell our viewers why we keep going back to last week, because one of our guests was here on the show and they said it's going to happen within a week's time, and it has happened.
It has definitely happened. In fact, his prediction was it will happen in the latter half of September.
Okay.
We didn't see this coming. The buying pressure, Shweta, has been so intense that we have seen movement across the board. Heavyweights were some of the stocks which were not performing, but in today's rally,
small cap and mid cap.
Mid cap and the small cap stocks had been taken over, at least the market momentum lately. But right now, over the last couple of weeks, we have seen Nifty and Sensex as well as other blue chip stocks gaining precedence and rallying. As a matter of fact, as I said, 750 points rally the market was able to establish within a 7 days period of time. Now, if you look at the numbers, yes, Nifty surged.
I mean, I'm just amazed at the numbers, by the way. I never interfere you while you're speaking, but I have to say this, just shy of the 4 points, 19,996 mark there. And the last time it was at an all-time high, it closed at 991.
Yeah, so it was an all-time high levels. It closed a little beyond that. So today's closing is actually above the previous record high of 19,991. So that is there. So just shy of 4 points shy of the 20,000 mark. Now Sensex also added about 528 points in today's rally. It scaled the 67,000 mark and even was above 67,100 levels. Now mid cap and the small cap indices, Shweta, have continued their outperformance. Both the indices rallied over 1% in today's session. Nifty mid cap 100 was up 1.14% at 41,444 levels. As you just, I remember last week you mentioned, when are we scaling that 41,000 mark? It was today. We scaled the 41,000 mark in the Nifty mid cap index today, and it closed above that 41,400 mark. Now Nifty small cap 100 was up about 1.33%, just shy of the 13,000 mark.
Okay, and Kranthi Bathini of WealthMills Securities joining us today on this historic day. Kranthi, first of all, I think the big question that is weighing on everybody's mind is what's working here in favors of Indian markets?
Hi, Shweta. Hi, Suyash. Yeah, it's a historic day for the market. Nifty attempted today touching the range of 20,000 levels. What's making the sense? All the odds are working in the favor of Indian markets. There is a complete positive vibes Indian market is sending across the globe. The grand success of G20 also one of the important thing we need to consider for the market. Indian market outshines the emerging market space, and with the grand success of G20, it is giving an indication there is so much groundwork and there is so much to look into Indian markets. That's what the message clear for the global investors. So in the coming days, probably in the coming quarters, we can see the new foreign portfolio investors participating in India's growth story. That's where the crux and the valuations on a longer term basis. It's fairly valued market at this point of time because of the PM data, and also other macro indicators are completely in the favor of Indian markets. That's what market is exhibiting right now. We have the market have climbed all the wall of worries. Shweta, if you see the market there are so many worries were there. One hand, the crude oil prices have been inching up, and inflation is the one of the key worry. And RBI have implemented CRR and incremental CRR, and the recent last week they have given a pause for that incremental CRR, and despite of the global growth worries, Indian market has climbed all the wall of worries, and now comfortably it touched the all-time high levels.
All right, and this comes, remember, right after India hosted a mega G20. I'm not sure how much that played into the minds of the investors. Perhaps you can elaborate on that, Kranthi. But also, let's also talk about the global uncertainty that you touched on and inflation. Inflation was a problem the last time around. Nifty touched about 19,900 mark. It still continues to be a persistent problem. Despite that, Nifty has breached all previous high records. On top of that, there is a global uncertainty that continues to linger, something that the G20 summit also talked about and elaborated on. Why is Indian markets, or why are Indian markets beating the odds? What stands out for us?
Yeah, Shweta, one of the key important factor that drives the market in the shorter term is the sentiment. The sentiment is completely positive. The other important factor is liquidity. The fund flows are quite strong towards India, both from the domestic and institutional front, and also the retail have been quite active in the markets at this point of time. And we have seen the foreign portfolio investors participating here and there in Indian markets. So the sentiment is quite buoyant, sentiment is quite positive, and the liquidity is quite strong in the market. It's a completely liquidity led rally, and that's where the market is on a higher note. Definitely G20 have given a positive vibes in terms of the positive sentiment in the market is concerned. So that made the market to stand at all-time high, Nifty to stand at all-time high. The global uncertainty is still there. Okay, it's not easy thing, but the one positive thing that's taking place in India is the strong positive sentiment towards India's domestic growth and also the India's consumer story. These are the factors making India looks attractive in the when compared to the global peers and other emerging markets. And the expectation from the international fraternity, especially from G20, is very nominal, but the way it concluded and brought the positivity is quite commendable, and it's incredible. That's where the positivity, positive vibes the G20 summit sent to the global investors.
Kranthi, the big question now obviously is what happens tomorrow. Now, will we see the buying momentum continue, or do you expect some profit booking at current levels?
Yeah, Suyash, as I mentioned, the markets have been climbing the wall of worries at this point of time. So we can see 19,800 levels acting as a strong support zone, which was the previous resistance level, have now become the short-term support zone. So we need to see these levels, how it's going to act at tomorrow's trades. But despite of 100 and 200 points here and there, Indian markets is definitely, it's a market to buy on every tips.
Kranthi, of course, the story is, as you also mentioned, foreign institutional investors are still not participating in the rally. In the last week or so's time, we have seen retail participation pick up. The primary sector's activities buzzing, as we can see in the number of IPOs that are coming out. Domestic institutional investors have continued providing support. So why are foreign institutional investors waiting on the sideline?
And while they're waiting, do you think the current rally will now promote them, support them, perhaps also push them to start putting money where the mouth is, essentially Indian markets?
Yeah, Shweta, I agree with you. And Suyash, to mention to your question, okay, the markets have been, the layers, the liquidity layers in the market is quite strong. That's what the beauty of Indian markets. That's where the Indian market is outperforming the emerging market peers. So when the domestic liquidity, when it's drying up, the foreign portfolio investors are here and there coming and taking the advantage in the Indian markets. So as I mentioned, it's a liquidity driven rally supported by all the positive sentiments that's driving the market. So what we can see is the strong liquidity in the market to support the market to sustain at higher levels.
All right, and while we are at it, let's also take a quick look at stocks that were buzzing, stocks that were in action this morning and throughout the day today. And railway stocks continue to be outperformers, Suyash.
Definitely, Shweta. So railway stocks, as you know, we have been tracking the story. Railway stocks have been buzzing for quite a while, and the fact is that they have received a strong orders from the government, as well as the modernization of the entire railway plan has boosted several stocks, and as a result most of these stocks have turned multi-bagger. Now today's surge, Shweta, was on the back of the September 9th announcement made by the PM, where he said that where he announced that India Middle East Europe Economic Corridor, which will include a multinational railway and port deal linking Middle East to Southeast Asia. Now the big thing is which we need to flag is that no specific company has won any contract now, but of course the expectation is that it will bode well for these companies, and as a result many of these stocks are trading near their multi-year highs, and in fact most of these stocks have turned into multi-baggers this year. If we see today's rally, Ercon International was the top gainer among railway stocks. The stock was up about 20%, it hit a upper circuit. IRFC also hit the upper circuit of 10%. RVNL, Titagarh and Railtel also rallied from 5 to 16%. Now among shipping stocks, Mazgaon Dock rallied about 2.38%, where we saw some correction in shipping Cochin Shipyard, which was down about 1.25%. Garden Reach shipbuilders also rallied about 1%.
All right. So all of that we are thinking, or we are interpreting, is on the back of that mega news of the IMEC corridor, or the India Middle East Europe corridor. An announcement that was made on the sidelines of the G20 summit may have resulted in a lot of people getting excited about what is the future of rail network, road network, not just within Indian cities but perhaps intercontinental. We have some more clarity. We'll dwell on that clarity later perhaps, but positive news there as far as railways, people who are invested in railways is concerned. A lot of momentum in fact happening in the railway stock, and not just the current existing ones. In fact, the Indian Railway Finance Corporation has also hit upper circuit at least thrice in the last 6 trading sessions.
Absolutely, Shweta. There is a complete buoyancy and the momentum is on with respect to all the railway related stocks are concerned. It can be consultancy, infrastructure, the finance, everything related to the railway stocks have been rallied. One thing is markets are always forward looking animals, what we can say. And coming to all these days, the news is with respect to the modernization of railways, as you have mentioned, all the domestic factors and the order book visibility and earning visibility have led all these railway stocks to rally in the recent last fortnight. But coming to the current announcement of the international trade corridor in terms of the railway mobility logistics is concerned, it's a big news. How the consortiums are going to take place, it is completely premature to say right now. So this is also one of the extra factor that's adding for the railway stocks. And coming to the shipping stocks, these stocks have been also because of the order book visibility and also the new orders that are they are signing up. So all these stocks on an average, they have given more than 100% returns. They have been majority of the stocks have multiplied, but on an average, names like Mazgaon Dockyard, Cochin Shipyard, Garden Reach, all these stocks have been more than 100% up in the past 1 year. And any dip in these stocks, these are the stocks which have a strong order book visibility, and the margins are comparatively decent margins for these companies. And these stocks comes under also as well as shipping, as well as also as a play for defense also. So there is a complete momentum in these stocks. investors with a long-term horizon, definitely they can hold on to the stocks, and any dip, it can be a good opportunity for the investors to accumulate the stocks on a medium to long-term perspective.
But Kranthi, don't you see that, I mean, at least from what I'm thinking is that no specific company has won any orders in regard to that rail and shipping network, yet the stocks are rallying like 15-20%.
I mean, the order will happen very late in the day. I mean, the details
exactly,
are
the gestation
not yet
period,
finalized.
He said 8 to 10 years time, details are not finalized, there is no clear a way forward for the companies, and yet the stocks are rallying like on a daily basis, 15-20% gains we are seeing on a daily basis.
I mean, what has government's, capital expenditure got to do and perhaps got to play up with these stocks? Because the stocks have been rallying for the past at least 2 to 3 weeks as we continue to track them. And perhaps the new, announcement by the way of an economic corridor may have come as a fresh impetus, but there has been a momentum and a sustained momentum for the past many weeks.
Absolutely, Shweta, the momentum is long lasting right now. It is more than a fortnight the stocks has been rallying on a day-to-day basis. The majority of the stocks, it's need to have a stock specific action right now. The momentum is on right now. It's like playing a musical chair. Okay, when this music will stop, okay, is the bigger question right now, and where the investor will be, which stock the investor will be when the momentum stops. So but given the kind of the long-term earning visibility is concerned, markets are forward-looking. So the kind of impetus that's given towards the domestic modernization of railways, as well as the new opportunities they are getting with respect to the international consortiums are concerned, the momentum is right now going on. So is there any need to go jump and buy on these stocks? Definitely not for the investors. They can wait on to the stocks. There will be, when the stocks have been rallying continuously, there will be some kind of consolidation that happens, definitely. So that point is the right time to have these stocks in the portfolio for an investor perspective. Whereas the trading is concerned, the momentum trading is concerned, investors they need to exercise the strict stop losses in these stocks while trading these stocks.
All right, and some other stocks that we are tracking this afternoon, one of course being IDFC, Suyash?
Yes, Shweta. So GQG Partners, the Rajiv Jain backed firm, as we know about it because it has been investing consistently in Adani group of shares, bought about 5 crore shares from IDFC's managing director and CEO V. Vaidyanathan at a price of about 94.5. Now the stake buy equates to about a 0.8% of the total equity of the company. Now notably, the shares did not see any selling pressure today because V. Vaidyanathan also clarified that the proceeds will entirely be reinvested in the bank, and this dispels all the concerns which were about, like, the money will be used for personal expenditure. So all the money that will be raised from GQG will go back into IDFC First Bank, and as a result we saw a rally in the stock prices. It surged about 2%, but it ended about 1.4% higher.
All right, and GQG has been in fact very bullish on India. This is not the first time they're making an investment. They've been making substantial investments in Adani Group as well.
Actually, if you look at it, GQG was the only big player that was betting on Adani after the Hindenburg report came out, and ever since, I think from March or April, they have been lapping up stocks of Adani Group on a consistent basis. And if you look at the GQG itself as a company, it has been bullish on the India story itself, Shweta. In its emerging market fund, it has an allocation of about 33.5% in Indian stocks. If we have the graphic of GQG's investments in Indian markets, we can pull that up.
All right, and so while we wait for that, let's quickly also get in Kranthi into this conversation. Kranthi, GQG bullish on India after Adani. We are looking at IDFC now. What is their bet on India? How do you read it? What does it make up for you?
Shweta, see, every fund manager and every fund house, their investment philosophy and investment chemistry in terms of choosing of the stocks are concerned. So they have, when everybody was skeptic about the prospects of Adani Group, they taken a point and turned the entire story for Adani Group is concerned. They invested in a company when there was a optimum level of pessimism was prevailed in the market. So that's the point of time they invested in most of the Adani Group shares, starting from Adani Enterprises, Adani Power, Adani Ports, Adani Transmission. So name any company, every company they accumulated their stock. So that might be the CIO Rajiv Jain. What he mentions is they are confident about the story, the infrastructure story, and the emerging opportunities that are arising. The group is going to capitalize over a period of time. So that made the stocks to rally, and they could able to withstand that selling pressure because of this investment, and also many of the other institutional investors are started looking into Adani Group shares despite of the high beta nature of these stocks. So overall, the point try to mention is every fund manager have their uncanny approach to pick up the stocks. So till now that has been paid them very well, and also right now the new kid on the block, they started buying like JSW earlier. The announcement was there. Now IDFC First Bank. This is IDFC First Bank is a completely different perspective when compared to the Adani Group shares are concerned. The bank offers, they're developing the decent, nice franchisee in India under the leadership of Vaidyanathan, and they have been consistently increasing their CASA and other parameters with respect to the bank is concerned. So it's a new stake acquisition for GQG is concerned. So these are the stocks we need to watch how the GQG is going to diversify, or they're going to focus on these stocks. We need to wait and watch.
All right. So infrastructure, then banking, that of course are the big bets that GQG is making on India at the moment. But let's move on. CCD is another stock that you're tracking, was down today on the back of news that is not going to augur well.
Yes, Shweta. So CCD Enterprises, which is the operator of Cafe Coffee Day, was down about 15% in today's trade. It fell as much as 17%. Now, this was on the back of like the company on Friday said that IDBI trustees have taken the company to the NCLT court for an alleged default of 228 crore. Now, the stock has been under pressure. We were seeing some buying activity at lower levels, but after today's session, the stock plummeted. It was down about 15% at close, fell as much as 17% in today's trade. So overall, the stock fell under selling pressure in today's trade. And if we let's also look at the quick gainers and losers of today's rally. Now, among the top gainers were the Adani twins, Adani Ports and Adani Enterprises. Adani Ports rallied over 7%. This was not just on the back of its deal with Singapore-based Kowa Holdings for green hydrogen supply, marketing and sales, but also Adani Group has been consistently increasing its stake in the company. Now, Adani Enterprises, the company had a stake of about 69.87%. It has raised it to about 71.93%. Adani Ports also, they have raised the stake. It was about 63%. Currently, it stands about 65%. Axis Bank saw a rally of about 2% in today's trade. It was on the back of a broader rally in banking stocks. Apollo Hospitals continue to be among top gainers ever since its capacity building plans. Power Grid Corporation also was among the top gainers today. Now, if you look at the losers, Coal India saw some profit booking after a 5-day rally where the stock surged almost 17%. We finally saw some profit booking today, but the stock is still at multi-year highs. ONGC was another stock which was in news today. ONGC fell about 0.27% in today's trade in the wake of crude oil leak in its Uran plant.
Right.
Bajaj Finance, L&T were some of the other losers.
All right.
We see only 4 stocks because only 4 stocks ended in the red, whereas all 46 stocks were in the green.
We're not complaining. We're not not complaining at all. And before I let you go, Kranthi, also your quick view on the Adani stocks. Adani stocks, both Adani Port and Adani Enterprises, were up today.
Yeah, Shweta, Adani Enterprises and Adani Ports and also Adani Transmission also up 5% during the day. Yes, the stocks have been high beta in nature. If you observe, the stocks have rallied earlier and they were in a consolidation phase. They came down, again they are rallying. So the nature is these stocks are suitable for the traders and investors who like the volatility and who want to see take the advantages in the volatility of the stock prices. So as the news item right now is the company has acquiring, the promoters have been increasing their stakes. So it's a positive indication and the stocks are rallied based on this news.
All right, and in fact, by the way of some fresh breaking news that is also coming in, we are given to understand that petitioners in the Adani Hindenburg case have also in fact sent out a writ petition or tabled a writ petition in the Supreme Court of India. We're still trying to get fine prints of what it means, but remember that important SEBI report into Adani Hindenburg is still awaited. That could obviously have an impact on Adani stocks tomorrow and the future of the company. We'll bring you more details as and when they emerge. But for now, Kranthi, thanks very much for taking time out. Thank you for joining. And Suyash, you as well. Thank you, gentlemen, both of you, for taking time out and for joining us here this afternoon. Moving on, the G20 leaders' declaration has underscored the need for collective action to tackle environmental challenges and climate change, also promote transition towards more flexible, transparent and cleaner energy systems. Now, none of it is possible without the participation of private players. India's ESG or environmental social governance regulations have been designed to promote sustainable, responsible business practices. The ESG ratings and classifications have been unclear for a while now, where participants who are left to fend for their own with their own interpretation. Of late, the Securities and Exchange Board of India has been urging businesses to disclose intricate details for transparency and sustainability. The Business Responsibility and Sustainability Reporting, the BRSR, now mandates such disclosures for top companies. There is a renewed focus on SDGs, also on sustainable future, and the progress on ESG is therefore all the more important. Joining us is Tyagi, who is climate change and sustainability leader consulting at Deloitte South Asia. Mr. Tyagi, thanks very much for taking time out, sir. My first question to you, I want you to take our viewers through the big takeaways from G20 as far as sustainability is concerned. Are we promising a better future? If yes, what kind?
Thanks, Shweta. Thanks for the opportunity. To answer this question, let's look at from where we started. Earlier this year, we started around land restoration. We're talking a lot about biodiversity, water security, which are related. Moving more towards blue economy, ocean economy, discussing a lot around coastal resilience, and the theme of resource efficiency and circular economy. The takeaways here, when we look at you can sum it up into a macro level, the SDG alignment, the 17 sustainable development goals we have, how we can look at SDGs through the lens of culture. Culture as a transformative driver. That's what they've used. How we can accelerate progress towards these SDGs. Moving on to what you started with around the green energy, the Green Development Pact for Sustainable Future, right? How we can really look at financing for cities of tomorrow, which are also related. The financing bit came in. And finally, of course, the disaster risk and buildings, right? How we can look at disaster risk management. The bit of element around gender equality, quality education, more of an extension of SDGs. But look, what I really liked is the focus on biofuels. Very important, and how we can improve blending of ethanol to 20%, nothing new, but when we look at its role towards decarbonization journey, it is great. In terms of the key takeaways would be a global common language as we head into COP28, how we can look at some real measurable, actionable interventions when it comes down to climate change, how we can look at commercializing new energy solutions, how we can come up with aggressive renewable energy targets, how we can look at our value chain and scope 3 emissions, right? And the role of scope 3 towards decarbonization, which is, think about any company, think about carbon, more carbon intensive sectors. 80 to 90% of their decarbonization goals come out of scope 3. So these are some of the views I have, and happy to emphasize more any of these aspects of biofuels. Over to you, Shweta.
All right. We'll of course come back to you very, very shortly. My colleague Krishna Kumar also joining us here in the studio. Krishna, the cornerstone, one of the pillars as we continue to highlight here of the G20 was need for a more sustainable, better future. A future which is in line with the SDGs. A very stark pointer that I could read from the report as I was reading this afternoon is that we're only about 12% into our SDG goals for 2030. We're already in 2023, 7 more years to go, which essentially means that although there is a lot that's been written on the paper, there's a lot that's been promised, a lot is not being achieved.
Clearly, a lot has not been achieved, and that's being taken cognizance of at the G20, Shweta. For example, the fact that there's a reiteration or recommitment to SDG goals as part of the New Delhi Declaration really tells you that the spotlight, as far as India's G20 presidency is concerned, the spotlight has clearly been on climate crisis and sustainable development. And if you see, there were many forums held in the lead up to the annual G20 summit, and there was a forum back in July in India where we're talking about sustainability and ESG goals as paving the world for the new, paving the way for a new world order. So as far as this has come from the fundamental thought, the theme of India's G20 presidency, which is Vasudhaiva Kutumbakam, which is one world, one earth, one future, and it's taking off from that and sort of understanding and the fact that resources are not a plenty, the limited resources. Is all about how you get those resources for them to be put to the best use and how we don't destroy the natural resources going forward.
Absolutely.
So this India G20 presidency, the spotlight is clearly be on ESG or environmental social goals that, this translates to corporate action at the corporate level, at the company level, then it means that more and more companies in India and across the world are going to be that much more recommitted to ESG or have to be recommitted to their ESGs.
Right, and Shailesh, as I continue to read through some of the pages that I did manage to read through, I think there's special focus on poorest of poor countries, the least developed countries, the LCDs, and the need for them to be brought at par with developing and developed countries when it comes to goals and sustainable goals. Essentially underpinning that you cannot have the same expectation of a country that wants to feed its poor but also wants to live sustainably. You cannot have the same onus and responsibility on the shoulders of developing countries. They should not. And a line that stood out for me, it was they should not be made to choose between feeding the poor and living sustainably.
Great, Shweta. And look, I started in this field some 20 odd years ago, or maybe a little more. And one of the reasons was how we really balance sustainability, what it means, right? Sustainability is about solving the trilemma. Let's look at your argument from the energy lens. How you provide clean energy, how you provide affordable energy, and how you provide sustainable energy, right? Reliable energy. So that trilemma always will stand. But the concept is how we look at sustainability from the lens of capitals. Every nation, every company need capitals to run the economy. And how we look at the financial capital along with social capital, human capital, and natural capital to have a balanced input into the economy. We have the right enablers, we have the right outcomes, and we measure the externalities from positive and negative perspective. That's the only way one can balance, right? It's not about one over the other. It's about bringing that balance. Right. And if you look at talking about LDCs or developing countries, every country has its own unique challenge. Why it's difficult for developed nations to achieve the same level of commitment because they have pretty well advanced systems. We have a tremendous opportunity in how we look at it from that lens. And look, transforming on sustainability, it's a norm. When I started my career, I had to prove to people climate change is happening. Not anymore, right? So it's moving, and so the lens has to be that balanced, sustainable, you
Fair
can say strong, stable and balanced, inclusive growth for everyone.
Right,
Yeah.
fair enough. Well, the bigger headline to me, if I were to ask you, this is Krishna over here, is that there seems to be an emerging consensus on climate financing. You know, there is SDG financing that was also part of the New Delhi Declaration. That, you know, and I'm talking that SDG is at a government level, at a nation level, and I want you to talk about that climate financing at that level. And at the same time, how about financing for ESGs, for companies to achieve their ESGs or environmental and social goals?
Yeah, no, great question, Krishna. And when you look at sustainable finance basically is about integrating ESG consideration into your decision making. And when we look at the global, let's look at India. India needs close to $170 billion every year to meet their decarbonization in NDCs, right? National Determined Commitments, NDCs. Now it needs that much of money. How much we are tracking at the moment? We are tracking around close to 44 billion. That's 25% of it. So how are we going to raise that money? Are we going to raise it from the lens of environment, social, or are we looking at it from the lens of SDGs, as you said, right? So it comes down to that the same question Shweta was saying of a balanced approach, how you're integrating. And as an example, right? I really like, and I'm emphasizing again on the biofuels. I mean, if you look at, let's think about India, how you can integrate these considerations to raise money towards decarbonization. Now, India, we are the world's third largest consumer of crude oil. We know that. We are heavily reliant on imports for over 85% of our energy needs. This push towards reducing energy imports and mitigating the nation's growing carbon footprint, how we can look at integrating these renewable energy sources in our energy portfolio, how can we achieve a CAGR of nearly 22% over the past 6 years.
Okay.
This is where I think we need to look at it from a different lens, look at it on our strengths and how we can then bring these initiatives from the ESG side, not just looking at one, environment or social, how we can really combine and bring it this sustainable finance input into the economy towards decarbonization.
All right, so big goals there, of course, reducing greenhouse emission gases, you know, developing more sustainably in line with the SDGs, hopefully reaching that target by 2030. All of that a part of the New Delhi Leaders Declaration as of Saturday here, signed and a consensus arrived at in the national capital in New Delhi. Remember the G20, and we continue to bring you all the updates from G20 right here on News9. But Shailesh, thanks very much. I'd like to thank you for taking time and for joining us here on News9.
Thanks, Shweta. Thanks, Krishna. Bye-bye. Bye.
All right, as we continue to bring you more updates, remember on the sidelines of the G20 summit in the national capital, a memorandum of understanding was also signed between the governments of India, the US, Saudi Arabia, the European Union, the UAE, France, Germany, Italy, and more to establish the India, Middle East, Europe Economic Corridor, IMEC. It's the big corridor that we've been talking about, the significance of which, more and more details of which is now coming out in the open. The IMEC is a network of transport corridors, including railway lines, sea lanes, that is expected to aid economic growth through integration between Asia, Arabian, Gulf, Europe, and the project is a part of the Partnership for Global Infrastructure Investment, PGII, a Western Bloc-led initiative for funding infrastructure projects across the world, also seen as a counter to China's Belt and Road Initiative. We have more details at this point, Krishna,
right,
you know, of what is going to be the roadmap for that
right,
economic corridor,
right,
and quite literally the roadmap
right,
on the map.
You know, from the euphoria of what you thought is going to be when the announcement came, is now questions on the logic and the sense it makes. Let me begin with the fact that for whatever that is being announced, the India, Middle East, Europe corridor, or the IMEC, fundamentally it's been signed as an MoU between the United Arab Emirates, the US, India and Israel. But it's going to involve other countries. First of all, this is a memorandum of understanding, so you need to look at the final, the exact details that needs to be done. That's going to take another 60 days at least. And the other countries, if I can mention, there is France, Germany, Italy. So there is the European Union as a whole. So all of them have to be on the same page to hammer out the final details of what this corridor is going to be. Now the thing is, what is this corridor going to be? From the map that from the map that we saw initially, we have things that are already in place in the corridor. Like there's a freight corridor in the UAE that already exists, and there is the Haifa port in Israel, which is part of this corridor, where Adani Group already has a major stake in. So the questions are now being raised is how much is fresh that's going to be made for this corridor, and how much of a sense is it going to make. But in the meanwhile, for the rail links that are going to be built, according to this memorandum of understanding, the rail links are also going to have cables undersea and underground cables being put, and also a pipeline for hydrogen transportation as well. That's going to come up along with these this freight rail corridor. So this IMEC is essentially a combination of rail and shipping. Okay. As far as shipping is concerned, there is no doubt in terms of how important shipping is going to be, and the fact that the existing capacities and the existing alliances between, say, Israel and India. Of course, the question is getting Israel and the United Arab Emirates together. That's what this entire deal is all about, because bear in mind, the Belt and Road Initiative of China managed to do the impossible by getting Iran and Saudi Arabia together. But in this case, you're going to get UAE and Israel together. A lot of people are sort of foretelling problems on that front that could happen, but we'll have to see how that's going to pan out. So certain doubts existing on that corridor, because how much of it is actually a corridor that is being created for a separate purpose, and other doubts being that it's repurposing of existing facilities to create a corridor that looks connected on the map. So we're yet to have some clarity on that front. It's going to be a while before we get finalities on it. Even to get the finalities on what the agreements between countries are going to be, it's going to take at least a couple of months. So we'll have to wait and watch.
But it's going to be shorter than what we initially expected, because we were hoping that there was going to be perhaps a transcontinental rail network, or perhaps a transcontinental connectivity, a hard connectivity. That's not going to happen. The ceilings continue to exist.
Yes.
Ports continue to be in place. There is railway network, freight corridor. All of that is obviously in place. So what is now needed perhaps is a possible mapping of the route and connectors to be put in place.
Exactly. And therein lies the optimism for companies in India, infrastructure companies in India, rail infrastructure companies in India. If you can attribute today's rail stocks shooting up in today's trade, they've been on an upswing for a while now. Right. Their optimism could have come from that whiff of optimism for the day at least, could have come from the fact that there could be orders coming Indian rail companies' way if India is going to be involved in the building of a transcontinental rail freight corridor. So, these are projections, Shweta, at this stage. If it's going to be built somewhere else, are the orders going to come to Indian companies? We don't know. How much of it is going to be built, and what are going to be the final nitty-gritties of who is going to contribute, how much, the costs. The biggest question on this corridor, Shweta, at this stage is the cost of making this corridor, and who is going to be contributing how much in that overall cost basket of making this corridor.
Right, but at least there is a map now. There is a map that that has been, we've been able to trace that map, as you can see on your screens, an eastern corridor and a northern corridor. Perhaps that will culminate the India, Middle East, Europe economic corridor, contours of which have been proposed. Hard details are yet to come out. The map on your screen is going to be ultimately what's going to lead into better freight, better trade, transport facilities with all these 3 blocks, or rather 4 blocks combined, because from Europe comes the US. But staying on with G20 and the official state visit of the Saudi Arabia Crown Prince Mohammed bin Salman, who's here in India, we have since this morning brought you visuals of what could mean by the way of a bilateral agreement between the 2 nations. At this point, we have more details of an MoU that was signed. In fact, various MoUs that have been signed between the 2 nations that is now coming out. Details are here. 8
of them, that's what we understand, the latest, the final statement after the meeting. So we're talking about, it begins of course by talking about the IMEC, which is a monumental achievement at the time of G20. But it's the 2 sides have also agreed to expedite the India GCC free trade agreement negotiations, which is another big headline coming from it. The GCC being the Gulf Cooperation Council. So India and the Gulf Cooperation Council free trade agreement that we're talking about, the negotiations which they say that took place in this trip of the UAE for G20 is going to act as a catalyst. I'm reading straight from the statement, Shweta. That's how good this particular visit has been. India, Saudi Arabia have started conversations on trading in national currencies as well. That's according to the MEA Secretary of Saudi Arabia, Aus of Said, and also speaking of the situation of the India blue collar workers in the kingdom. So this visit by the state visit of Crown Prince and the Prime Minister of Saudi Arabia, Prince Mohammed bin Salman bin Abdulaziz Al Saud, yielding a lot of results, and the fact that he was sitting on that podium right next to the Prime Minister Modi with Joe Biden on the other end had a lot of tongues wagging as well. But clearly, the conversation between MBS and PM Modi have gone on very well. 8 MOUs being signed and a free trade agreement negotiation with the Gulf Cooperation Council being initiated.
All right. So those, of course, are very extremely substantial developments that have come in by the way of that negotiation between Saudi Arabia, bilateral talk between Kingdom of Saudi Arabia and India. Remember, this is a state visit of the Crown Prince of Saudi Arabia. He is here for today. He is expected to leave by the end of today, but important developments there coming in, and this is an extension of the G20 summit. We continue to bring you all the details right here on News9. But before we end this bulletin, an important story that is coming by the way of trouble and troubles that are mounting for SpiceJet. Supreme Court on Monday ordered SpiceJet to settle a $1.5 million debt owed to Switzerland's Credit Suisse bank by September 15th. The court also warned of, and I quote, drastic actions if the payment is not made on time. Now, Credit Suisse had filed a request with the Supreme Court to commence contempt proceedings against SpiceJet and its founder Ajay Singh for deliberate and intentional non-compliance with court's order and failure to settle a $3.9 million debt as stipulated in a prior settlement agreement that was reached between the two parties. The information is disclosed by the way of a court document that was filed today. The legal dispute, remember, between Credit Suisse and SpiceJet dates back to 2015, primarily revolving around Credit Suisse's assertion of unpaid dues amounting to approximately $24 million. This dispute eventually resulted in a court order from the Madras High Court in 2021 mandating winding up of the airline. Upon appealing in the High Court of the High Court order, in fact, of winding up, the Supreme Court temporarily halted the liquidation proceedings. But this is, in fact, a fresh jolt to SpiceJet.
No, absolutely. It's halted the winding up proceedings, which is quite a harsh order coming from the Madras High Court. But what it has done this time around, Shweta, is that it has literally warned SpiceJet with that 15th September deadline, and quote unquote the Supreme Court is saying drastic action.
And by the way of drastic action, let me quote exactly what Supreme Court said. Supreme Court actually warned Ajay Singh of landing him in Tihar jail. They mentioned the word Tihar jail. Right. That is as big as it gets.
Right. And that's as if you ask me, as bad as saying that SpiceJet should wind up according to the Madras High Court order. Ajay Singh in Tihar jail, SpiceJet as an airline winding up, both are not sounding absolutely terrible at this stage. We cannot afford to lose as customers, as airline customers in this country. Another airline at this stage. We've just rehabilitating a couple of airlines back onto the air, and this is definitely not good news. And really, fingers crossed that SpiceJet repays its dues on time.
All right, so it's a lot hanging in the balance for SpiceJet there, especially for Ajay Singh, against whom some very strict statements have come out of Supreme Court today. We'll keep bringing that story up as and when more details are out and about. But for now, in fact, that's all we have on this bulletin. Thank you very much for watching.
At GPT, it can generate codes and human-like responses through text, write stories, and do a lot more.
I work in a newsroom with anchors, researchers and scriptwriters, graphic artists, producers, video editors, camera crew. But does a newsroom really need them today?
All of us have to think about unique and distinctive value addition that cannot be automated or repeated or replaced by a machine.
ChatGPT may kill many companies.
A human has to be in the loop with an ability to control this.
Dark Side of the Boom. Streaming now.
China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it. It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies. Streaming now